Good morning, everybody. Happy Friday. It's Friday the 13th. I don't know if that's a good thing or bad thing. Grain markets are mixed this morning. Pretty quiet trade. Matt Bennett is here. Guys, let's start off with yesterday's crop estimates out of Brazil.
So, Conab has increased its estimate for this season's Brazilian soybean crop. The agency is forecasting the crop to reach 166.2 million metric tons, up slightly from its previous estimate and 12.5% higher than last season. Favorable growing conditions have boosted planting and crop development. As of December 1st, 90% of the expected soybean area had been planted. Soybean acres are projected to expand by 2.6% this season, reaching slightly over 117 million acres. The Brazilian Association of Vegetable Oil Industries is projecting Brazil's soybean crop at 168.7 million metric tons, a slight increase from its November forecast.
Record crops expected, and the estimates are rising. Matt, the soybean market has acted maybe a little bit better than some people had expected, but still can't seem to hold a trade above $10 in these spot month futures.
No, they can't. You go back to Conab. I mean, it seems to me like most years they're running shy, whereas the USDA is slow to adjust.
Mm-hmm.
Some of these folks are in the 170s now. I think, given the planning pace, you could certainly make the conclusion that, or not the conclusion, but the forecast should continue to go up. The bean market, though, I think is already trading at 170. I mean, I've got to think that it is. And that's part of the reason that, like you said, we perform better than what you'd think. We can't get anything going. I mean, you look at the chart and I mean, you could look at a very slight uptrend on beans before, this trade here this morning, but I don't know. I mean, here's the thing. Crush has been fantastic. Exports have been good. But USDA made no changes, and that tells me that they kind of feel like everyone else. If Brazil has this big crop, there's just not going to be, a whole lot of exports after, Feb 1. I mean, it's going to really slow to a crawl.
The world supply and demand situation is the big problem. I've shown you guys the stocks to use ratio chart. This is just outright world ending stocks. USDA is projecting world ending stocks near 132 million metric tons, and the previous record was 114. When you think about it, the size of the Brazilian crop, call it 170, you're going to have world ending stocks that are, a huge percentage of the Brazilian crop. It's almost like having another Brazilian crop just in ending stocks. I mean, that's how
Yeah,
big the ending stocks may be. It's
right.
it's substantially bearish.
Right, and it's up. That 2 year window USDA gives us, we're up 30%. I mean, that's just a gigantic
Yeah.
increase over the course of those 2 years. And so, yeah, I mean, I don't know. I mean, it makes it really tough on this bean market. Most of the guys that are talking about, hey, beans could go to $9, fundamentally, absolutely they could. I mean, I
Mm-hmm.
think you look out into the future, Joe, and I think we could both agree U.S. bean acres are probably going to be the lowest we've seen for a while this next spring. I mean, most likely, corn acres going to be pretty stout. And so, with that being the case, I think you could see bean acres off a little bit. Maybe on the backside, you could start building a little bit of a story if demand stays this strong. But man, world numbers just bearish as could be.
I've got some acreage stuff in a second. Here's some weather. These maps are from our friends at Crop Profit. Over the last 14 days, weather in Brazil has not been perfect, but it's been good enough. They've been a little too wet, perhaps in the south, and maybe not quite wet enough in the north, but they haven't been void of precipitation in Mato Grosso. It's just been a little bit drier than normal. The next 14 days, everything is just pretty normal-ish. I mean, weighted Brazilian soybean crop is going to see 108% of normal precip over the next 14 days. So there's just nothing to worry about. You mentioned acreage, and here's a NOVE 25 soybean chart. We're 1008 ballpark this morning. I did a budget video with Chris Barron earlier this week. And the way Chris runs budgets, he incorporates like cost of living and all that stuff. His average production cost was $11.76.
Mm.
And the price on the board, that's not even a cash price, is 1008. So how many acres do beans lose?
Yeah, I should have went back. I need to go back and watch that. And in totality, what was he using for a land cost?
I don't have it in front of me.
Yeah.
It's an aggregation of his customer base, so it's
Okay.
different for everybody. It's just meant to
Well, yeah.
represent an average.
Yeah, I mean, I know like Farm Doc uses the average cash rent for all the FBFM guys,
Sure.
and I think last year in Central Illinois was 353. So, their numbers are probably pretty similar to Chris's. But how many acres do you lose? I mean, you go back to 2 years ago. I think corn acres were 94.6. I mean, I'm looking for a number like that or above. So, I think the totality of corn and soybean acres will be lower though.
Hmm.
So, I don't know. From this year, I think you could lose uh 4 million acres, 3 to 4 million acres. I think it's very I don't know what I want to call it likely, but I would say it's possible that the acreage loss could be just a little more than what you would think. Now, one thing I'll tell you is that, and I told you this I think the other day, that maybe the only thing keeping me from a really really high corn number is, I do think there's going to be a little bit of a cash crunch for some folks, and it'll keep bean acres there because they're just cheaper to put in the ground. But I do think this ratio is going to get awfully interesting.
Yeah, the ratio is not the only thing that matters. The one thing that I noticed when I was looking back at corn acreage, most of the time that you saw, like the few times that we saw corn acres like 94, 95 or above, it was usually because prices were good. Well, I guess in the case of 12 and 13, it was because prices were good. But then you did 94 million in 2016. Prices weren't very good then. You did almost 95 million in 2023, and prices were good, I guess, to start, and then they kind of leaked. I don't know if like this losing money in both crops is enough to plant 95 million acres of corn. Does that make sense?
It does make sense. I think what it gets down to me is a couple of different things. What does the insurance guarantee look like versus what you've got invested in the crop? I don't think our insurance guarantee is going to be any beauty queen this year by any means. But one thing that I have noticed in talking to growers that get outside of your areas where you grow extremely good soybeans is that, when they start running the math at $10 basis the board, even if they throw a cash price of $10 up there, with if their APH is 55, 60 bushel beans, man, that's pretty tough to come by any sort of profit margin. Whereas some of those same areas still had 230, 40 bushel corn the last few years. And so, while their APH might be 200 or 210, they've seen some of those big, off the chart type yields. And so they feel like their best opportunity, if they're going to roll the dice and go to the craps table, their best opportunity is to go with corn. And the U.S. grower likes to grow corn. We know that. So I think you're going to see big corn acres. It's hard to, it would be tough to convince me otherwise right now.
If you guys are watching on YouTube, drop your early corn acreage planting estimate in the comments. What about export sales?
So, U.S. soybean and corn export sales were disappointing last week. Net soybean sales fell below pre-report expectations at 43 million bushels. The print was down a whopping 49% from the previous week and down 42% from the prior 4-week average. China was the largest soybean buyer for the week. Net corn sales also fell below expectations at 37 million bushels. The print was down a staggering 45% compared to the previous week and down 32% from the prior 4-week average. Colombia was the largest corn buyer for the week. Net wheat sales were near the lower end of expectations at 11 million bushels. The print was down 23% from the previous week and down 31% from the prior 4-week average. The Philippines were the largest wheat buyer for the week.
These sales were slightly disappointing relative to expectations. When you look at corn, we're still doing really good. I can't help but wonder if USDA overshot a little bit with that increased export projection earlier this week. We're still competitive though, Matt.
Oh yeah, we're still competitive. That there's no question. And so, a lot of folks have been floating around, and I would say a 2.5 to 2.6 type number in the industry. And I'm talking like in the commercials. A lot of the JSA guys were talking about this recently. Of course, the pace would suggest you could see something like that. You and I both know there was some front loading ahead of a potential type tariff discussion, but right now. I was shocked that they did that in December. Okay.
Yeah.
So, I agree with you. They may overshot, but I was just shocked that it happened in December. I mean, typically you don't see them stepping out on a limb in December. So, USDA must feel fairly confident about their number here. But I think moving forward, what we have to watch is, does Mexico's pace slow down substantially? I mean, I think we all kind of know it's got to slow down at least somewhat. And then does China? I mean, the C word, does China step in and buy what I would call respectable levels of sales? A cargo or two here, of course, would be nice. But I mean, if you came in here, in January and saw something, I think it was back in January of 21, they bought 2 million tons today and tomorrow and the next day. If they start doing something like that, then that changes the whole landscape of this. It's just I'm holding my breath that you're going to see anything of substantial nature.
Brazil has yet to plant, of course, their second corn crop, which is the bigger crop and the big export crop. So there's still a lot of things that could happen here. Soybeans are a little bit different. Brazilian export pricing is declining as harvest approaches. So U.S. soybeans are becoming less competitive. And I just don't know what sort of sales pace is sustainable here. I mean, seasonally, we should start to drop off pretty significantly.
Yeah, I mean, I would make the argument that if one of the two had to scale back, at least on a relative basis, I kind of feel like soybean exports may actually come down from the USDA as well. And so I think moving forward, we're going to have a really hard time selling anything. I mean, you look at the real versus the dollar. I mean, it's super cheap, like a 20-plus-year low. And with that being the case, if they have a 170 million ton crop, we're not going to export very many beans in the second half of the marketing year. That's all there is to it. So I don't know. At this stage of the game, I think a couple of things come to mind on total sales is that the spring crop is going to get planted in really good time this year, which means they may be able to avoid some of that late season dry. It's their dry season, when they get out to pollination and behind. I don't know. I got to think that they're going to see pretty good exports for both. I mean, we don't know what the weather's going to do down there, but bottom line right now, it looks awfully good. So I'm concerned export sales are going to fall off big time.
Now let's look up north to Canada.
So Canada might impose export taxes on key commodities shipped to the U.S. if Donald Trump imposes broad tariffs. Uranium, oil, and potash would be among the commodities subject to the taxes. Canada is the largest foreign supplier of oil to the U.S. and the primary external source of uranium for U.S. nuclear power plants. Additionally, Canadian potash is a major source of fertilizer for U.S. ag. It is possible that Trump will exclude commodities from his tariff threats and instead target Canada's manufacturing industries. Canada is more likely to use retaliatory tariffs on U.S. imports and export restrictions on Canadian products before imposing the export taxes.
Yeah, so these are not actually tariffs. They're export taxes. They're going to tax their own exporters, I guess, when they send things to the United States. Matt, as it relates to our farm crowd, I mean, the energy piece is probably the biggest one, but maybe fertilizer, more importantly, I don't know.
Yeah, I mean, for sure. I agree with you. And this year, the one bright spot, I think, as far as inputs were concerned, is that potash is pretty cheap. And so you start getting into a discussion where in potash, like Kinsey said, I mean, we get a lot of potash from Canada. So, if you start tariffing or it's going to be more expensive for us if this type of trade war happens. I know everyone's confused on who's tariffing who, but
yeah.
Bottom line, potash would get more expensive, and that's the last thing we need because phosphate it doesn't seem to be able to come down. So, yeah, I mean, we've got to hope something like this doesn't transpire.
I really don't think we're going to get into a severe trade war with Canada or Mexico. Both of those countries, their leaders have come out and explicitly said how bad it would be for their own respective economies. I don't think that's anything that they want to deal with. I really don't. Let's get to some more tariff stuff.
The U.S. agriculture sector is engaging in discussions with Donald Trump's team to address concerns related to his proposed policies. Key issues under consideration include tariffs, trade, and immigration. Some groups are advocating for the expansion of the H-2A visa program to support the labor needs of ag producers. Additionally, some groups are urging China to honor its commitment to purchase $50 billion per year in U.S. agricultural products as outlined in the Phase 1 trade agreement. There's also a push for China to approve certain crop traits that would provide greater market access for U.S. farmers. Trump's proposed tariffs remain a major concern among industry groups. However, similar to his first trade war, he is expected to provide aid to farmers to help reduce financial losses.
Yeah, Trump, there could be some Trump bucks. I think I was told maybe even as early as this weekend, we're going to know something about the Farm Act, which is a direct payment vehicle that could happen without Trump. I don't know, Matt, does the National Corn Growers Association have any real power here? Or any of these other organizations when it comes to something this big?
I don't know. That's a tough call. I mean, you've got to think, and I've said this a few times, is that after last time around, you've got to think there's been some learning that's gone on as to what was the true impact here. Yes, we saw Trump bucks. I think you ask the average grower, they're going to say, if we could avoid that, they would appreciate it.
Yeah.
They would rather be in a situation where we're getting, $5 corn than $4 corn and Trump money. But
Mhm.
yeah, do they have, your question is, do they have any impact? And I've got to think that they're going to be at the table talking, but at the same time, I think Trump's got on his head what he wants to do, and going back to the discussion just with Mexico, Canada, the whole thing, now this slide, it's a negotiation deal. I mean, we're negotiating right now, and I think people are throwing out jabs and seeing where they land, and seeing what the other side says. So I think we're a long ways. I think the threat of tariffs is totally different than the implementation of tariffs.
Yeah, you've got 5 weeks till Trump's inaugurated. I mean, you hope that there's a lot of talk and a lot of forward progress before that happens, I think.
Summit Carbon Solutions has received approval for its carbon capture pipeline in Minnesota. On Thursday, the Minnesota Public Utilities Commission approved Summit's plan to build 28 miles of pipeline. The pipeline will run from the North Dakota border to an ethanol plant in Fergus Falls. Construction on the pipeline is slated to begin in 2026, but Summit is still finalizing right-of-way agreements with 7 landowners along the route. Summit has received permits in Iowa and North Dakota and is reapplying in South Dakota after being denied. The pipeline will also serve Nebraska, but Nebraska has no agency responsible for permitting carbon capture pipelines.
So there's a couple of Summit things out yesterday. They got their Minnesota approval, and then they got sequestration permits from North Dakota. The big thing is that they're still waiting on South Dakota, and without South Dakota, this is a no-go. But it's looking more likely, Matt, that this happens.
Yeah, it is. I mean, I know the frustration with people that are having to deal with this directly. So to be honest with you, it's frustrating to even talk about.
Mhm.
It probably needs to happen for for this whole renewable fuels thing to do what it needs to do. I mean, if we're clear about it, Joe, I think you had a good slide that I use sometimes, about what's going on in the crush industry. I mean,
Mhm.
crush industry is got to go up as our export share goes down. I mean, South America is about tripling us right now as far as total world exports go, and I don't think that's a trend that's going to slow down. But at the same time, if I'm a grower and they're saying, "Hey, we're going to go right through your home 160 that's been in the family for 5 generations," I mean, I don't want that. I mean, so yeah, it's a tough topic.
Yeah, we understand this is a massive area of contention. There are people watching who absolutely hate this. They think
Yeah.
it's a terrible idea. They think it's a scam. They think it's an infringement on their land rights. And other people say, "Hey, we need it because we need the extra demand uh, for corn via ethanol for biofuels, even though it's not even a guarantee. Government policy still lacking." There's a lot of things going on here, but that's the latest from Summit.
USDA released weekly drought monitor data yesterday. Precipitation was limited across the Corn Belt last week. Drought conditions were mostly unchanged across the area. However, continued moisture deficits caused conditions to worsen in portions of Illinois, Indiana, and Missouri. The High Plains were predominantly dry. Conditions were mostly unchanged week over week, with the exception of drought spreading in western Kansas. When we look at the percentage of U.S. areas experiencing drought, corn 57%, soybeans 51%, winter wheat 29%, spring wheat 33%, and cattle country 41%.
Matt, it's mid-December. Are we supposed to be concerned about Midwest drought this time of year for any reason?
Not necessarily. I think the one thing that concerns me, Joe, is draft levels on the Mississippi. I
Mhm.
mean, this is not a time of year where we get much moisture. And so you could get kind of a double whammy moving forward of Brazil having much cheaper products due to this real versus dollar situation, and then us not being able to load barges 100%. One thing I would say is that the dry trend this fall, I mean, it tends to sometimes carry over. I know Eric Snodgrass talked about this some. The dry September and October has got some statistical ties, to a really dry following summer. So we know that spring weather systems can come through and kind of take all this away very rapidly. But at the same time, going into winter with no subsoil moisture, which is what a lot of folks are doing, is frustrating. Coincidentally, I'll tell you, Joe, right here, we can't get a whole lot of anhydrous on. Topsoil conditions have been pretty moist, and so we haven't had any tiles running though. So we don't have much subsoil moisture, but we've had some moisture. It's not like an all-out drought deal. But I would say a lot of the growers I talk to are concerned about how dry they are right now. So typically, it's not the time of year though that you're going to lose sleep over it.
There's a little bit of rain in the forecast, but it's mainly confined to call it the central or eastern Corn Belt, and then kind of the mid-south. That's the next 7 days. Western Corn Belt, mostly high and dry. And same thing for the 10-day period. Very similar. Most of Iowa dry, most of Minnesota dry. The plains from North Dakota all the way down to Texas dry over the next 10 days. So it is kind of divided here in terms of what's expected over the next 10 days.
USDA reported a flash sale of soybeans on Thursday. U.S. exporters sold 13 million bushels of beans to unknown destinations for delivery during the current marketing year.
I'm told that we're less competitive, but we're still selling beans. Do you think cancellations at some point are inevitable? I hate to be Debbie Downer here, but that seems to be the chatter,
If I was going to guess, Joe, I'd say we're over 50-50 odds of cancellations. And I'm not talking one or two. I think if you get into this tariff discussion with China,
Yeah,
that's one of their trump cards.
I don't even know if it needs to be tariffs. I think it could just be Brazil is huge and it's cheaper.
That too. I mean, we know why they came to us this fall, because we had the beans. I mean, that's what it boiled down to. Yeah, they waited forever. I mean, I think that they saw that they were going to have to buy some beans off of us. But if they feel like they can get by and go to Brazil and replace some of the beans that they bought off us, they're going to make cancellations. But I think the tariff discussion will play in as well.
Yeah, we'll see. What did cattle do yesterday?
Cattle futures were lower. Live cattle were 12 cents to $1.22 lower. Feeders were 70 cents to $1.32 lower. Box beef was higher. Choice ended the day at $315.24. That was up 401. Select ended the day at $280.48. That was up 237.
Awfully strong as of late, Matt. What are your thoughts?
The cash market, has been kind of the leader in my opinion here. The funds, I don't think the funds want to go much longer. I mean, they just seem like it's an old story. And so I don't want to be bearish cattle. The thing is, though, you got to stay protected, in my opinion. I mean, I don't know. Well, these prices are a blessing. That's all there is to it. But I would be more of the opinion that the board could move lower versus moving higher. I mean, let's face it, you're pushing $7-8 off all-time highs. So I don't know. I mean, I'm not super friendly here, but at the same time, you go to the sale barn and try to buy cheap feeders, they don't exist. And anybody selling fats is getting a fat paycheck right now, which is nice to see.
Mackenzie, what's the latest on the screw worm story?
Mexican cattle imports are still halted. They were thinking it would be mid-January when they got all that sorted out, but it's just kind of a wait-and-see deal.
But it's still a friendly input.
Definitely friendly. Yeah, we don't have those extra feeder cattle, and that's really boosted feeders here recently.
Outside markets on Friday, guys. U.S. dollars about flat. Stocks are high. Our bonds are mixed. Gold's down $23. Crude oil is up 70 cents in the January WTI 70.71 last trade. Have a great weekend, everybody. Matt, thanks for joining us. We'll be back on Monday.